receiving a lot of questions of why I continue to use this drone and drone footage in my vlogs. Well, for one, it's actually a lot of fun. And number two, we've got a lot of stuff planned, believe it or not, from a vlogging perspective for you guys to further your education from for investing and for trading. And the drone is going to start taking a center role in this going forward. So that's really why. But that's not what I want to talk about today. What I want to talk about today is shares of Tesla. Of course, on July the 5th, shares of Tesla continued to drop on the back of some news, a downgrade by Goldman Sachs, including news out of Volvo that by 2019, they are no longer going to make fueled cars, like they're only going to make them electronic or electric, I think is the correct word, and or hybrids. So that's put a lot of pressure on shares of Tesla. I've been on the record now for, I want to say about a month or so, not to chase that stock higher, and sure enough, it's now coming back down to earth. Where do I think it's going to go from here? What might be the next play? Let's have a look at the charts. I'm going to move over to my other computer here for that. And by the way, in the near future, I'm going to do a webinar that's going to be literally broadcast by drone. Live webinar broadcast by drone. Not because it's fun, but there's actually a practical use for that, and I'll show you guys that in the next coming weeks or so. So let's head on over to the charts and take a look. So before we even look at any chart here of Tesla, let me just review the basic principles of when a chart or a stock rallies too steeply for too long. I've done this now for nearly 20 years, and I can tell you that without fail, without exception, any stock that rallies too strongly, too steeply, so once a steep slope goes vertical, ultimately they correct at least 15 to 20%. A lot of times they correct 30%. Shares of Tesla have kind of done the same thing as of late. The other thing I'll quickly mention, and so that's one of the core principles that I make sure I tell my Clubhouse members every single day. By the way, if you want to join the Clubhouse, you can try it for just $7 for the first 30 days. Go to thestudytrader.com/trial and have a look at that. But really, the other thing to keep in mind with shares of Tesla is that the emotions are very extreme. So I do a lot of conversations with hedge funds and other institutional investors and high net worth folks that I advise on a daily basis. And really, the camp in Tesla is very, very clearly split in between. It's very clearly, there's a lot of polarization. People either love the stock and they swear by everything that Elon Musk touches, or it's completely the opposite. And that's exactly what the opportunity is here. So ultimately, when that polarization snaps, which I think it now has, a stock like this will get more volatile. Now, it's not going to have to be volatile forever, but I do think it's going to be volatile for some time now. So let's have a look at shares of Tesla. So the very base case here is that Tesla ultimately has to retest the breakout point from this past March or April down to the high 200s. It doesn't have to do this in a straight shot. The stock so far has corrected about 15% as of today from the highs, from the June highs down to today. Today is July 6, 2017. So that's the base case. But let's have a look at this a little bit more closely, because this in and of itself doesn't really give us a whole lot of justifications for that type of statement. If you look at the stock here, and this is again, this is the same chart, but you can see what's taking place here. We had that clean breakout out of a multi-year consolidation phase, and through this time frame, and particularly if we make this a weekly chart, in other words, each bar is 1 week time worth of trading, you see we haven't really had a meaningful check back or retest of that area on the chart that you can see down here around the high 200. So it's maybe 280, 285, maybe 290 or so. And classically, that's what you tend to see for a stock before it starts to have the better potential again to bounce. Now, I'm not making any statement here whether it's going to bounce or not. Ultimately, Goldman Sachs yesterday came out with a price target of around $180, which is more like the lower end of this range. That would be quite something. I'm not making that statement because I don't know. No one knows, quite frankly. But for right now, I think there could be further weakness. Again, in something like Tesla, like a 5% bounce here is absolutely possible. In fact, might be probable. But I think ultimately a better target down here is in the high 200s, and here's why. Okay, so for one, it basically ends up being the previous area of resistance. Okay, but look at how this matches up with. I did a very simple Fibonacci retracement. I took the lows here from last November. I pulled the Fibonacci retracement thing all the way back up to June, to the high. So this is just a very simple, and you can see that the 50% retracement, so a 50% retracement, in other words, okay, 50% retracement of the move from the lows of last November into the June highs of this year comes in exactly at the same spot. Exactly at the same spot as this previous point of resistance. So that's why I think this is a better spot to potentially look for to either buy again or maybe even short it again down to that level. So if we now look at the daily chart, I'm going to bring up a daily chart here on the shares of Tesla. What you can see is that we've essentially now, all we've done so far is moved to the lower end of this trading range that we've been in. We overshot a little bit in Tesla, just like we did in many other stocks that have been sort of cult-like Google's, like Facebook's and all those kind of things. And now we've reverted back to the lower end of that range. But I think considering the bearish reversal we've had on the weekly charts, if I go back to the weekly chart, you can see that's a pretty ugly outside price action last week, and this week follow through. I think ultimately through a multi-week lens, maybe into late July or something like that, this stock could revert back into the high 200s, maybe 280, 290, something like that. If the harder the stock continues to fall, the less that becomes a call to be able to participate on. What I'd love to see, and this is just a wish, right? No idea if that's going to happen. I would love to see some sort of a bounce here, followed by another bearish reversal, in which case we could look to play the stock to the downside. Now, again, I'm not going to do anything in the stock until if and when I see a little bit of bounce, followed by a bearish reversal. But right now, if you're a long-term investor, I think it makes sense to lighten up on the stock. One can always get back in on a bullish reversal, or again, maybe a little bit lower near 280 if and when we see a bullish reversal right there. But the key point here for me, the key takeaway is to step away, stay out of the stock. If you're long from a near-term perspective, I think this is a better stock to stay out of for right now. If you're long-term, I think taking some profit is something that I would consider personally. I hope it makes sense, guys, and I'll see you in the next video.